Good morning, everybody. This is Rudy coming at you live from Palm Beach in Florida. It is Sunday. It is September the 10th, and I want to talk a little bit about Petrobras, one of my worst decisions for the last year or so. That was selling Petrobras, not buying Petrobras. There was a time when I was quite happy to exit a position and take 100% profit. And I don't say that boastfully. I actually say that with some sense of trepidation. Because, and I'll give you a practical example or two. There was a time when, long before I was making YouTube videos, I still used to blog as Best Investor. And I'd buy, for example, I think it goes back to maybe about 2010, 2011. I bought into Microsoft for about $28. And when Microsoft traded in the $50 range, I plugged in a trailing stop and exited the position, making 100% profit at, let's say, $56. So my cost base is 28, my sales price 56. And I thought that was just genius, right? One-time profit return on that, 100% up, and effectively 2 times my cost basis, and I'm exiting the position. Made a couple of those. Some of them didn't turn out too badly. Like I bought Boeing, for example, also in the sort of $60, $70 range, and exited the position at around $106, $107 or so. And unlike Microsoft, Boeing was just languishing since, it hasn't done too well. There's also a time I had a small profit on Amazon, and Amazon was trading at around $430 a share, and I sold out of Amazon. And if I had held that position, I could have had a 10x on it. But so sometimes we get out too early. And in this particular example, what I'm going to share with you is how I got out of Petrobras probably too early. So going back to the beginning of this year, I had planned to attend the mining indaba in South Africa in February of this year. And I wanted to free up some cash in case I found a mining company that would be worthwhile investing in. Now, mining as a general rule just sucks. And while I was at the mining conference, one of my friends, Matt from Germany, said to me that he was also there. And he said, what the definition is of a miner? And I said, tell me. And he said, it's a guy who's lying to you standing in front of a hole in the ground, right? So anyway, I didn't really find something that was worth investing in, except perhaps for Colonial Coal, which is more like an exit strategy, because I'm waiting for Colonial Coal to be sold to get an uptick of maybe, I don't know, 3, 5, 10x on my cost basis. But one of the reasons why I sold Petrobras was political turmoil after the election, when Lula was elected as president of Brazil, which happened in October last year. Another reason why I sold Petrobras is because it was my worst performing energy stock. In my basket of energy stocks, it was literally the worst performing stock that I had. So I thought, like, if I'm going to drop one of them, it may as well be Petrobras. And then the another reason for selling Petrobras at that time was I was sitting on a small gain, so I thought I'll just take some gain and get out of the position. Now, no one gets poor selling stock for a profit. So in that regard, I don't really have any regrets. But let's see how my decision panned out, because as I said at the start, it's probably one of my worst decisions in terms of where I was at. My cost basis on Petrobras was about $8. At the time when I sold, my cost basis would have been slightly higher because I've been reinvesting my dividends. And of course, Petrobras pays a huge dividend. And when you reinvest your dividend and the stock price is higher, then your cost basis also goes slightly higher. So by the time I exited, Petrobras, for me, was a cost basis of around $8.80 or so. And I exited the position at about $11.20 or thereabouts. So it took some profit, but it was not a good decision, especially from a timing point of view. Let's look at Petrobras here, sort of year to date. So if you look at the performance of the stock, this is the preferred, so Petrobras ADR.A. When you look at the stock return over the past year to date, 63%. So obviously I missed that. And what we're talking about there, in terms of when I say I missed that, I'm talking about opportunity cost, right? So I had the ability to stay in Petrobras and stay long in Petrobras if I wanted to do so. And instead, what I did was I chose to stay long in some of my other energy stocks. including my ETF, XLE, Occidental Petroleum, Energy Transfer, and a couple of others, Blackstone Minerals, Alliance Resource Partners, etc. So I stayed long in stocks that actually didn't move much at all, right? So of late, obviously, energy prices have gone back up and the stocks have gone back up. But in reality, the stocks that I stayed long in did not perform nearly as well as Petrobras. So arguably, in hindsight being 2020, I sold the wrong stock at the wrong time. I probably should have stayed long in Petrobras and sold some of the others. Let's take a quick look at the snapshot of the company here. Petrobras, of course, is a super major headquartered in Brazil. I say super major, I'm talking about oil, gas, and consumable fuels. It's arguably still the cheapest energy company in terms of super majors that you could buy into on the market today. The price for PBR, so I'm looking at PBR.A. These are the preferreds. You can buy PBR. If you buy them in the United States, they are ADRs, which is called American Depository Receipts. Effectively, they trade at par. So it's like you buying a stock for the same value as the stock price of the actual CUSIP or equity. Buying right now for about $13.45. I did buy some Petrobras PBR.A, so the preferreds, and I bought them because they had a slightly lower price and they pay the same dividend as the common stock. Currently, it's yielding 18% because it's paying $2.43 on that $13.45 stock. As I said, it's a super major. It's a $90 billion market cap company. And at the bottom here on the left, you can see that it's sort of edging towards the high side. And as I said at the beginning, my cost basis was more like $8 as opposed to the current price of the PBR stock, which is getting closer and closer to $15. So that would have given me 100% gain. Anyway, TipRanks analyst Schmanless currently has Petrobras a 10 rating. It's the highest rating you can get. It's an outperform. And they say it's a moderate buy with a target price of $15. Now, if you buy Petrobras and you're buying the equity or the ADR at around $13, $14 or thereabouts, don't expect it to go to $70, which it did previously under Lula's tenure. It's more likely to be sort of in the high teens. So you're not necessarily buying it for the uptick on the stock price or the appreciation on the stock price directly, but certainly from a dividend yield point of view, this is a very high interest paying savings account. At the bottom on the right here, you can see the technicals and the fundamentals are all positive. We'll look at those in a little bit more detail as we go. From a balance sheet point of view, if you look at it on a quarterly basis, you can see this is a pretty good picture. The blue lines are the total assets and the yellow lines are the total liabilities. Now, you'll notice that on the liability line, the yellow one over here, there's not much of a downdraft here in terms of the liabilities being paid down. Now, of course, a company like Petrobras, which is very, very heavily interfered with from a state point of view, would never necessarily try to pay down most of its debt, like you see with balance sheet repair from many of the super majors and energy companies around the world. When the energy prices were high, they all climbed in, boots and all, and started paying down some of their debt, reorganizing, refinancing, etc. Petrobras, not so much. They don't really care. It's sort of like a state-owned enterprise, even though it's masquerading as a publicly traded company. Cash and short-term investments down quite considerably. We're going to look at that in just a second as well. There's a reason for that. The assets are pretty much the same, and the liabilities actually slightly ticking up as opposed to down. On an annualized basis, the picture looks a little bit better than the previous quarter. Cash and short-term investors year over year, only down 10%. Total assets are about flat, and the liabilities are actually going up a little as opposed to down a little. Currently, the energy price is obviously relatively high, with Brent near the $90 range in terms of its current price per barrel for futures, which are October futures. So Petrobras, if they wanted to, could actually pay down some debt, but they don't elect to do so. I'm going to compare it here to 4 other super majors, and I specifically chose super majors from around the world, except for the fact that BP here in the middle of the screen and Shell on the right, which used to be Royal Dutch Shell. Shell is now also headquartered in London. So even though it used to be Royal Dutch Shell, it's now sort of more a British company. And BP, of course, British Petroleum, where you've got Exxon, which is American, and Total Energies, which is French. And then I've got Petrobras, which is Brazilian. You can buy Petrobras The reason why I'm highlighting the $14.81 here on the PBR stock is because it's a low cost of entry, right? When the price of the share is very high, like for instance, Exxon at $114, if you have $1,000 to invest, you can't even buy 10 shares. But if you have $1,000 to invest in Petrobras, I know this is not necessarily material information, but it is meaningful, right? It's much nicer to be able to say, I bought 100 shares or 1,000 shares of, let's say, Petrobras compared to I bought 8 or 9 shares or whatever of Exxon. At the bottom, you can look at the difference between these as from an industry point of view, emerging markets. Now, arguably, Brazil is an emerging market, and on the other hand, it is not. It's one of the larger economies in the world. And then you can see most of these companies are the same, oil integrated, international, except for Total, which is refining and marketing. To be fair, Total is also an international integrated company, but they market themselves as a refining and marketing company. If we look at the technicals, for all the technical nerdy guys among us, the 20-day raw stochastic, if it's higher than 80%, means these companies have been overbought. And you can see all of them are overbought if you look at it purely from a 20-day raw stochastic point of view. The one that's least overbought, that kind of sounds like a contradiction in terms, is Petrobras with a 20-day raw stochastic score of 80. Now, if it's greater than 80, as I said, it's overbought. So most of these companies, from a technical point of view, are overbought. In reality, you could pretty much say if you have any cash awaiting investment that you want to park in any particular sector in general, energy is probably still the place to be. The opinion, in terms of the analyst opinion on whether to buy or sell the stock, you can see that the analysts' sort of opinion on Petrobras and Shell looks a little bit better than the others. And Exxon, in fact, moved from a month ago, 8% of the analysts said sell, to now 40% of them say buy. A much better indicator for me than, for instance, the 20-day raw stochastic is the price-earnings ratio. On the price-earnings ratio here, I have Petrobras at only 3.2, so it is super cheap. The other one that is also relatively super cheap, and I'm going to skip Total for a minute here because I don't really like the European play in terms of energy. They have too much interference from the tree-hugging green people. But BP, with a price-earnings ratio of 5.7, also looks pretty good. In fact, to be fair, they're all cheap with PE ratios under 10, and right now we sort of want to be under 15. Now, if you look at it from a performance point of view, and I'm not looking here generally at short-term periods like 5 days, 1 month, etc. I'm not a day trader. When I find an undervalued stock, I buy that stock, and I typically hold that stock long, generally 3 to 5 years on average. Sometimes I'll exit the position within about a year or so, but in general, my minimum holding period is about 3 years if I go long on a particular stock. Now, Petrobras, of course, as I said at the start, was a great performer, and in fact, a significantly better performer than some of the other super majors if you compare it, let's say, on a 6-month basis, up 31%, and that's why I mentioned the opportunity cost, right? So if I were to be in Exxon, which I am through XLE, or otherwise if I held directly Exxon, BP, Total, or Shell, I would have underperformed Petrobras significantly, which means my timing was really, really bad. How about this one? We're looking from a key statistics point of view, and I'm looking here at this particular row here that says annual sales, and I'm comparing it to market cap right at the top of the table. And what I'm doing is I'm taking the annual sales, dividing the market cap into it, and it gives me sort of a price to book or a price to sales indicator, right? So I'm saying Petrobras is a company that generates $124 billion in sales, and it has a market cap of $94 billion, which means its sales exceeds its market cap 1.3 times, which is favorable, and a company that immediately attracts more attention from me. However, the same is true for all the others as well. In fact, the best one of the lot is BP, which is generating $250 billion in sales and a market cap of only $111 billion. So based on the sales to market cap equation, Petrobras is well priced, but BP is even priced better than that. Most recent share information, these are earnings, all of them are positive. And right at the bottom here, you can see if you want to get in pre-earnings on Total Energies before it goes ex-dividend, then you can certainly buy it before September the 15th. If you wanted to buy the others, you're going to have to wait a quarter or more to get into their next ex-dividend date if you're buying it purely to collect the dividends. If you look at the chart over a 1-year period, well, this is kind of the beautiful picture, which is a sad picture for me because, as I said, 1 year ago or so, I actually exited Petrobras, and I therefore lost the opportunity to add a 40% uptick to my portfolio from an energy basket point of view. And some of the other stocks that I hold and that I'm long in, and I've mentioned some of them already, like Energy Transfer and Occidental Petroleum, XLE, etc., have all given me a gain so far year to date that is positive. And in addition to that, they have paid me dividends. In the case of Occidental Petroleum, my worst dividend, and in the case of Energy Transfer, my best dividend. I've had the opportunity to reinvest those dividends and just buy more stock. The fact of the matter is, from an opportunity cost point of view, I lost the 40% uptick on Petrobras, whilst I was happily socking away the gain in single-digit percentage numbers plus reinvested dividends on the others. Let's look at the financial highlights for Petrobras, and this is from their own reporting. I am not a fan of EBITDA. I much rather prefer net revenue or net operating costs as a comparison from a fundamentals point of view. Americans in general love EBITDA, earnings before interest, tax, depreciation, and amortization, and use EBITDA as a benchmark or as a factor or divisor or whatever for all types of ratios that they calculate. So we see net debt to EBITDA. I don't want to see net debt to EBITDA. I'd rather look at debt to equity as a ratio, because this is kind of a little bit skew for me when they say net debt to EBITDA is only 0.7. It's actually higher than that, but that's the way they choose to report it, so that's how it is. The high net income is very, very good. The free cash flow is fantastic. At $6.7 billion, and that's for the quarter. $56 billion in taxes paid. I'm going to come back to that one in a minute as well. But here at the bottom on the right-hand side, $6.2 billion in dividends paid out over the past quarter. So the macro environment, which are things that you cannot control, shows that Brent over the past sort of 1 year period has declined in price. So top line price of around 31%. There's absolutely nothing that companies like Petrobras can do about that because they are at the mercy of whatever the market price might be. And then, of course, exchange rate is something that they cannot control either. And here they are comparing the real to the US dollar, and they say that's down 5% as well, which obviously negatively impacts their performance and their results. Here's their EBITDA slide from their own presentation. And you can see at the bottom of the screen, the Brent price, how it dropped from 114 to into the 80s and then the 70s. And when you look at the adjusted EBITDA and you look at the recurring adjusted EBITDA, the picture looks okay. It looks pretty good. But at the same time, you are talking about earnings before interest, taxes, depreciation, and amortization. And I prefer to count cash that is in the cash register. The adjusted EBITDA in US billions, you can see the drop here, 9%. And of course, they cannot necessarily control this because it's a macro environment, because EBITDA reflects the drop in Brent and higher tax expenses related to taxes on oil exports. How about the debt trajectory? So I talked about the debt a little bit earlier. The indebtedness has not changed significantly, but it's actually ticked up a little bit. Now, as I said, with all the state interference in Brazil, where the government is pretty much mandating and doing all kinds of stuff to influence whatever happens at Petrobras on a day-to-day basis, you always have that macro risk. And at the same time, politicians in general have no particular desire to pay down debt. In fact, if anything, they will just increase the debt and keep doing so. Probably, the old proverbial kicking the can down the road. They'll just keep doing it until something has to give or something collapses. Ironically, the same people, for instance, in the United States that put the country into over $30 trillion in debt are the same people who manage what they call your credit score, which is somewhat ironic in a warped sense of humor point of view. The amortization profile on the debt doesn't look too bad. If you look at the debt maturities coming up over the next 4 or 5 years or so, doesn't look too bad at all. The light blue block here is leasing, and the darker one financing. So with the type of cash that Petrobras generates, this should not present a problem at all. Net results. So of course we saw the Brent devaluation. There was a drop of more than 40% in international diesel crack spreads. Higher operating expenses. This impacts everybody because of the hyperinflationary climate that we've been operating in. Collectively, the net result down about 20%, not something that they can control. In fact, the company is doing exceptionally well. They're still producing well over 2.5 million barrels of oil equivalent per day. So from a revenue generation point of view, when Brent moves from 85 to 86 or from 88 to 90 or whatever, it's multiplied by millions and millions of dollars on a daily basis for a company like Petrobras. They return to society $56 billion in taxes. And you can see the majority of these taxes go to the federal government in Brazil and to the individual states. Almost more than 40% of that going to those particular two entities from a taxation point of view. The remuneration to shareholders is one of the primary reasons why you might want to consider having a position in Petrobras. The dividends and the interest on capital approved. So the payment here, so you can see the first parcel that they will be paying on November the 21st, which is 37 cents interest on capital and 21 cents dividend per share. And then there's a second parcel coming up, which is a 57-cent dividend per share, which is going to be paid on December the 15th. Now, of course, because I was not long on Petrobras when they went ex-dividend, I will not be receiving this dividend. But, maybe at the current price, it's a good time for me to start look at getting back into Petrobras. And I'd buy the preferred A's instead of the PBR common stock, simply because I can buy it at a slightly lower price and the dividend is about the same in terms of money. Their premise is to distribute based on results, the financial sustainability of the company. I don't think there are any questions about the financial sustainability of the company, despite their high debt. They are making money hand over fist. Capital discipline, optimization of cash allocation, and management of liabilities. Well, that's debatable. There's a share buyback program, which is favorable to long holders of the stock as well. 157.8 million preferred shares, representing about 3.5% of the free float of this class of shares over the next 12 months, together with dividends. So if they are paying high dividends and in addition to that buying back some shares, this is very favorable to investors. So that's sort of a quick summary on Petrobras, and perhaps a motivation for me to say, well, I lost the opportunity cost of being long in Petrobras for the past year. But now with the stock trading at around $14, $15, I don't expect it, as I said earlier, to go to, $30, $40, $50, $60 per share, although it's possible. The upside, in theory, over the longer term is relatively unlimited, relatively speaking, whilst the downside is $15, right? If you buy a stock for $15, the most you can lose is $15. The most you can gain, on the other hand, is unpredictable, and the upside is, relatively speaking, unlimited. But the best way to view Petrobras right now is a relatively medium to higher risk type of position. And despite all the cash that they generate, there are macro influences like the price of oil and gas, the state influence and interference, the return of money to shareholders, plus the buybacks and things like that, servicing the debt, etc. There are some macro elements that they somewhat are either beyond their control or that they can control a little. But there's some risk attached to Petrobras. I don't see a lot of upside in terms of the stock price, but I see a lot of benefit in terms of earning that very juicy dividend yield. So if you're looking for somewhere to park cash awaiting investment, Petrobras might be an opportunity for you to potentially open a position in right now. But you can let me know what you think in the comments, and we can go from there. And thanks for watching. Take care. Bye-bye.